Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you guys, and summer for a lot of people here, so I hope you guys have some great plans for the summer here. It's June 9th today, and we got really kind of a very quiet day today. Since it's summer, a lot of Fridays, are going to be pretty quiet here. Nothing on that kind of economic calendar today, but next week will be pretty heavily weighted. This week was kind of a light one, but next week will be a lot more coming up. But stock market's up today. We passed Super Thursday, so basically kind of just shrugged their shoulders and moved on is what it was. There's really no change in what was really didn't affect us here in the U.S. So what was Super Thursday? We had ECB came out yesterday with their announcements. Basically, no surprises. Left the rates unchanged. Basically made made statement that inflation was under control. Deflation seems to be subsiding. So things seem to be getting better in Europe. Comey's testimony didn't seem to have any effect on the markets either, because it didn't seem like he had any damaging information to say. So that kind of moved off. And then after hours, we got the hung Parliament. So basically what that meant was Theresa May, the Prime Minister, didn't have the majority in her, so it's basically even. So there was concern initially about how that may play a role in the Brexit and the process and the votes needed for negotiation. But here's what they're at. Here's the sentiment basically out there. That is, regardless if she got the majority or not, they're going to be leaving. They're going to be leaving the EU. And even if she had the majority, we don't know what kind of voting or negotiating she would have had prior to. So that uncertainty basically is just being swept to the side, and they're just kind of moving forward. So really, again, no effect here in the market. So let's go ahead and take a look at the bond market. So as the stock market's taking off, it's, as you can see, we got this downward slope here, and it's been taking money out of the bond market. So here's where we are today. We are just between the 10-day moving average and the 200-day moving average. Now, after tonight, after the close, we're going to have what they call a bond rollover. Is basically where they package up the bonds, reset it, and goes on. So you'll probably see this like a big drop, but there's no effect in the pricing. So you might show some. It could usually between 15 and 30 basis points. But there's no effect in the pricing. It's kind of a reset, and we could be starting way down here again. So just kind of give you guys heads up when you look at this on Monday. We have what they call a bond rollover. So right now there's really no effect in the pricing. We're down about 3 basis points right now. We're kind of between the 10-day and 200-day moving average. And with the way the sentiment and everything's kind of moving so far today, it doesn't look like anything's going to really change. And that's kind of where we'll probably end up with the bond rollover pushing us down below the 200-day moving average here. All right, so pricing, again, about the same as what we left off with yesterday. And if you guys want to get more updates throughout the day, in case anything does change, just come over to Twitter. You can find me at Mike Bjork on Twitter, and we can get you some more information. Also, if you guys are in the market for a mortgage, I do help out plenty of people who are buying properties, whether if it's a refinance or purchasing. We give them the pre-approvals. We send their files to underwriting, so that way they have a nice clean file when they're ready to submit offers, and basically it's almost good as cash to them. Also, for those who are looking to refinance, we're helping out clients that are currently in adjustables with the rates going up. They're repositioning into a fixed rate right now. We've got people who want to take advantage of the rates on the 15-year, so going from a 30-year to a 15-year fixes. And then also we got those who are have built up a lot of equity into the property and want to take advantage of that and are pulling money out of their equity for several different reasons, from either debt consolidation to have investors that want to buy other properties with that money to college expenses for kids going to college now. So those are a lot of different examples that are out there. If you got questions or any assistance, just please feel free to reach out. You guys have a wonderful day. Enjoy your weekend, and we'll look forward to see you guys on Monday. Thanks for watching. Bye-bye.